macro trends, Bitcoin, gold and silver, the stock market, the COMEX, and hyperinflation. Hello, this is Crypto Mark. Welcome to my channel. Thank you for watching this video. Please subscribe to this channel and also hit the like button. In today's video, I'll be analyzing Bitcoin's trend, both short and longer term. I will discuss further as to why Bitcoin has been following the patterns of other financial assets, such as the stock markets and other financial instruments. What is the importance of holding the United States dollar? The famous saying goes, cash is king. It is not a joke. Why is it that many people say this? Cash is king because it allows you to buy things, and, in a way, is a form of holding ammo in reserve inside a gun, ready to fire. When I called last year, around November into December, calling for a stock market crash, I was right, but I got the timing wrong. Nevertheless, if you had considered what I said and was or were taking profits in that period, you would be in a good position now. With cash ready to spend on Bitcoin, gold, silver, or stocks which you thought were extremely overvalued just months ago. Why won't the US dollar hyperinflate in the short term? The world population psychologically trusts the United States dollar, and rightfully so. It is because it is the world reserve currency, and because the population of the USA trusts the US dollar, at least the majority of the population. Hyperinflation historically does not occur until after people totally lose trust in the government and the currency which is issued to them. Why should you be constantly stacking both gold and silver? Gold and silver have been trusted for thousands of years. There is a good reason to why they have been given the name of God's money. While it is true that the COMEX, or the Chicago Mercantile Exchange, controls and perhaps manipulates the price of the paper contracts, one must not be fixated on that, but rather the price of the physical coin or bar, which is the bullion price. Because there are roughly 1,000 contracts for every gold and silver coin or bar, gold and silver are physical and have been trusted since time immemorial. If you are looking for a long-term savings plan or insurance against central banks, then gold and silver are your safe bet, with very minimal downside. However, at the current moment in time, with the gold-silver ratio currently 112, meaning 112 silver coins to equal 1 ounce of gold, or perhaps 112 ounces of silver to equal 1 ounce of gold. This is the highest in human history. The obvious choice would be to buy physical silver at this time, and also be stacking gold, but be more towards the silver side, because historically, when the ratio, the gold-silver ratio, is this high, it is unusual for the ratio to remain above 100 or even 90 for long periods of time. As such, it is a good idea to be buying silver right now because it is extremely undervalued compared to gold. And historically, silver always runs or appreciates in value after gold goes first. Now we have seen the price of gold hit all-time high prices in currencies other than the US dollar. What is going to happen when gold actually makes a new high in the United States dollar? This is most likely going to drag silver with it. However, you might see gold go up 1% on a particular day. The time will come, and this is not speculation, this is historically what's happened, and gold and silver are more trusted than Bitcoin, of course, and rightfully so, because of their history and track record. Silver might double the percentage gain, or even loss, because silver is like gold, but it's more volatile and more speculative. But that's not to say that it is the lesser of gold or it is worse than gold. They are both good to be stacking. And silver is actually used in industries more so than gold. So for now, the best thing, in my opinion, and many other people's opinions, would be to be buying silver at these prices. And if you did see the ratio plummet to below 100, 90, 80, 70, 60, 50, 40, or even below 30, it will be a very smart choice or decision to be switching your silver into gold, because this way you are mitigating the risk of your wealth. Why has Bitcoin not made a new all-time high yet? Bitcoin grew fast in its first few years, but has since matured and has appeared to be making new highs every 3 to 5 years on average. This makes perfect sense, since any asset in early stages is prone to more volatility. If you reflect on what happened in 2013, 14, 15, 16, and 17, you had stages of disbelief, hope, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic, capitulation, anger, depression, as per the Wall Street cheat sheet, the typical market emotions. It appears to me like we are now in the denial or disbelief stage, with Bitcoin currently rallying from $4,000 to $7,000, plus or minus daily prices. At which it is a smart thing to be buying Bitcoin now, but not going all in, and leaving cash in reserve ready for another possible large drop, along with the stock markets, like what happened just recently. Why Bitcoin fell 40% on March 12? As all markets in the world were crashing, people needed cash and were selling everything from gold, silver, stocks, bonds, ETFs, etc. As such, Bitcoin suffered its worst day in history, dropping 40% in one trading day. However, this was a panic selling, and it is likely that it could happen perhaps one more time, with the stock markets looking as if they might make one more low before recovering to new all-time highs again. Why Bitcoin is most likely to hit 20k, 100k before 2022. With most markets recovering, with one more possible crash down, it's more likely that Bitcoin will recover as well, with a potential short to mid-term correction before things start to look more positive for the asset, especially after the May halving supply reduction next month. If history repeats or rhymes, which it usually does, we should see an increase in demand for Bitcoin, leading it to the next parabola in the next few years. For example, Bitcoin is now in the pattern where it's more mature, and perhaps it could be following the years prior. For example, 2013 could be like 2017, 14 like 18, 15 like 19, 16 like this year, and potentially 2017 could be the year, which is 2021, when we could see the next parabola, or even top in the price. This is not a certainty, however, with the way markets develop, and after they become less volatile, it is definitely possible that this pattern is more than likely to be happening now. 2013 was when the Bitcoin price hit a high of just over 1,000 US dollars, which hence made it go to a bubble. And after that, it went into a bear market, which found its bottom 2014/15, and 2016 was the year which we might be in right now. The same year, coincidentally, which was the halving. 2016 had a halving. So is this year. Is there a pattern that is about to repeat? That's anyone's guess. But it is definitely a smart thing to be buying at least a portion at this point in time into Bitcoin. Yes, it's possible it can drop again to 4K, and if you were smart, you would have had buy orders on that big drop. For example, at 7,000, 6,000, 5,000, 4,000, 3,000, and maybe one of your limit orders did not get filled. But you now have an average price of perhaps $5,500 for every Bitcoin that you've bought. And holding cash in reserve, ready to buy, is the smartest approach. Why DCA, or dollar cost averaging, is the smartest approach to be buying Bitcoin for now? Only the whales with large amounts of money know where the immediate price is headed for. The safest thing you can do at this point in time is to consistently be buying small portions of your capital into Bitcoin when it most suits you. For example, $100 every week or $1,000 every month. And when there are larger corrections, you can double the amount for that specific day. If you do this, you are mitigating the risk of market volatility, and you will be less inclined to sell and more inclined to hodl and wait for the next big bull market. I think that the most appropriate forecast or prediction for this point in time would be for Bitcoin to hit 100,000 United States dollars before 2022. The parabola could commence up to 1 year prior to that period. But for now, keeping cash to stack in US dollars, silver bullion coins like the American Silver Eagles coins for the right price. For example, no more than 23 US dollars per silver eagle coin, and to continue stacking Satoshis, also known as Bitcoin. That's just for now. At this point in time, short term and maybe mid term, be buying US dollars, and if you are living in the United States, keep hoarding your cash and get ready to spend or invest for the long term if you feel the need to. When you see big corrections or big down days, the market's down 5%, 10%, 15% on Bitcoin, it could be a time, definitely, to take a position. And when silver goes down, and you can buy the physical coin because a coin is harder to forge or fake than the bar is, then you'd be buying silver. I would like to thank you immensely for watching this video. If you found this information informative or useful, please subscribe to CryptoMark. Please like the video and comment for any future suggestions. Thank you and have a great day.